There's one tool almost every real estate investor leans on to get the biggest tax advantages, and it's the 1031 exchange, often talked about, seldomly explained. I'm going to do it in as easy a way as possible right here in this video. Hey guys, I'm Dan Beer, Beer Home Team, eXp Realty, and you know one of our sayings is we're here to make real estate easy. Well, let me explain the 1031 exchange, how it works, and how you can use it in the long term. Because on the surface of it, the way a 1031 exchange works is you have an investment property, and when you sell it, you can defer the taxes. You don't have to pay the taxes at that time, but the taxes are still, let's call it earned or accrued. But you push all that cash forward into another investment. That other real estate investment typically has to be larger than the one you sold. And then when you sell that one, you finally owe the tax. Now, of course, some people will 1031 that one and 1031 the one that follows. And the way that people eventually end up never paying the tax is that if you just do that or hold on to the final one until the time of your death, your heirs, your beneficiaries, will not be taxed on all that deferred tax that you exchanged in, all right, that took place in that 1031 exchange. Your heirs instead will have what's called a stepped up basis. So if that property that you purchased and was worth $1 million at one point and went to 2 million, went to 3 million, and you were deferring those taxes through the exchange, and then you finally were to pass away and inherit that to your heirs, well, those $2 million of gains, your heir does not have to, the beneficiary does not have to pay tax on. When they get possession of the property, their purchase price, so to speak, right? We call it a stepped up basis. So their tax basis is actually the current $3 million of market value. And so at that point, they can sell the property. And of course, now this gets into a deeper, bigger conversations on inheritance taxes. So please go talk to your CPA about this. I just want you to understand the concept of how 1031 exchanges are used and why they're so important for real estate investors and really for a real estate economy, because it's one of the reasons that people keep investing in real estate, improving property, which improves neighborhoods, improves communities, provides better places for people to work, and ultimately is a driver of this economy.
Whether you're buying or selling, the answer is clear. Go with beer, the Beer Home Team.